Hi everybody, Alex Deploy here from Expert Forex, and unfortunately this morning our streaming video failed on a technical basis, and unfortunately we couldn't complete that. And what I would have liked to have shown was the live review and use of the lifestyle technique. So what I've decided to do is do a video of the process that we would have gone through during that live streaming event. Unfortunately, I wouldn't have the benefit of any questions that you would ask during that event, and what I'd ask you to do is please list those questions in the commentaries to this particular video. So let's go through what would have happened this morning. So essentially the lifestyle Forex trading process consists of 8 steps, and so what I'm going to do now is I'm going to go through these steps, and we're going to review 12 currencies on 2 time frames using the RSI trading setups. We're going to add any great setups to our trading diary. We're then going to review those setups on the relative strength chart. We're going to either add or eliminate more crosses, and then we're going to review those crosses on the actual currency charts, which will be multi-time frame and multi-technique charts. And then we're going to create possible trades with stops and targets, and then make a decision to trade or not. The last step here, to do postmortems on your trading diary over weekends. Obviously we won't do that. Is an activity that we do over weekends, and one I've already discussed in a previous video. So we're going to do steps 1 to 7 today. Okay, so let's have a look at the RSI setup that I'm specifically going to be looking for. And the setup works like this. I'm looking for the RSI to have gone oversold or overbought, depending on which direction we're going in, and then also have gone overbought. So we've got an oversold and overbought environment. Then I would draw a trend line over some of the turning points of the RSI, and that would then be a signal when the RSI crosses that particular trend line. So it's a very simple system. The qualifications has to be overbought, oversold or overbought. The next leg has to be overbought or oversold, and there must be a trend line violation. The settings I like using is 80 for overbought, 20 for oversold, and a setting of 4 periods on the RSI. Now, just to give you a few more examples of that, here we have the Aussie Yen, and as you can see, the signals occur quite a lot when the market is trading in a certain way. So if you look at this last one, oversold, overbought, and we've got 2 nice waves, and it's about to go over that trend line, and when it goes over the trend line, it will be a trading signal. Now you can choose whether to wait for the candle to close when it crosses a trend line, or you can trade immediately depending on your trading style. Now we look at the previous signal, which was overbought, oversold, draw the trend line over the turning points on the RSI, and trade when the RSI crosses that trend line. Now you can see what happens is you get into trades very, very early. Look how early that signal was, right at the beginning of a trend. Look at the previous one. Again, you've got oversold, overbought, you've got a trend line. Again, look how early you get into the trend. So it's a very powerful signal, and that's why I base a lot of my trading around that one single system. And we can carry on and go through this example. Overbought, oversold, there's the trend line. Again, look where your entry is, right at the beginning of the trend. Oversold, overbought, and there's another thing there that I'll talk about, and then the trend line violation again right at the end, right at the beginning of the trend. Now on this particular example, you'll see that there's another thing that I look for that adds value to this is a divergence. Now, divergence is when, if you draw a trend line over the price chart, you'll see up here, if you look at my cursor, it's going up. But the RSI, if you draw a trend line over the turning points there, is actually flat. So there's a divergence between what you see on the chart and what you see on the RSI. That divergence is a warning that the trend is going to change. Now, in this example here, you can see that the turning points were really discovered quite nicely every time using this approach. So again, oversold, overbought, trend line violation, and I'm looking for quite nice waves. Like there were 2 waves there, there were 2 waves there, there were 3 waves there. But I'm looking at nicely formed waves. That's one that's forming right now, 2 very nice waves. In general, the Forex market moves in a 2 or 3 way rhythm. Okay, so that's what I'm looking for. So let's go and look at the charts. So I normally look at the 4-hour charts and the daily charts because I like sort of the longer term swing trading approach in my trading. It's a lot less stressful and a lot more reliable. Now, I have already looked at the charts prior to this video, and I must tell you, there's nothing much happening. We've either missed a couple, or they haven't happened, or some currencies just aren't setting up for that kind of trade. So, and that's the beauty of this particular method. It keeps you out of a bad market. If the market isn't moving in a nice wavy format, it won't give you signals and you won't be able to trade. So I've got 12 currencies on this chart. Let's have a quick look through them, and hopefully you can get an idea of what I'm looking for. And this process, when I do it on my own, not when I'm explaining it as a video, I can get through this process between 15 minutes and 20 minutes. So if I choose to trade 5 times or 10 times a week, it's only 20-minute sessions. And you can trade this technique as often as you like. You can trade it twice a week, you can trade it 10 times a week, whatever your lifestyle allows. And that's the beauty of it. Also, because you're only trading 1 transaction at a time, it's ideal for US traders who are busy and working, who only want to look at the charts maybe once or twice a day, or maybe once every 2 days. Perfect trading technique, especially if you're using the 4-hour and daily. So let's have a look at the individual ones, and I'm going to go slowly. I normally do this in lightning speed, but I'll just go slowly. As you can see, there was a nice setup, but it didn't go overbought there, so it doesn't actually qualify. If it doesn't go overbought and oversold, it doesn't qualify. So the euro, in fact, I'm going to take those lines away. Here we've got one, it's gone overbought, it hasn't gone oversold, so we can't really use those. You can see the previous one, overbought, oversold, 2 nice waves, gave a great trade upwards. Again, I'll just delete those lines. All right, so here's one that's starting to look a little bit better. Overbought, oversold, 2 waves, overbought, oversold, 2 waves. Again, the same thing has happened here, but it's too late. We've actually missed this one. We should have entered when the candle came across here, but the price is more or less still at the same level as when it crossed over, which actually is a warning that the signal is maybe not working. So I'm not going to add this one, although that is a good setup and could possibly work. I'm not going to add this one to my shortlist. The other thing about this system is it does keep you out of trades a lot, and it makes you very selective, because you know when you've seen when you find a good signal, and you know when you haven't. Okay, so let's move on. Again, a nice previous trade. This one wasn't the greatest trade. You see the mounds, the waves underneath the trend line are very badly formed. So it's not a great trade, but it did catch that one. And we're in the same situation. There's our 2 waves. We've got this trend line violation. It's a bit like the previous one. It hasn't moved since the signal has happened. So I'm going to leave that out as a signal. Normally what happens is you do get a long candle when that crossover happens. Okay, so let's look at the next currency. And I'm not really looking at which currency it is or whatever. I'm just looking for that particular setup that I am looking for. And you can see it's not happening right now. So I'll just move on. This one, not happening right now. Could change it to that. Previous signal was quite good. This one is not volatile enough. It's just going sideways, so we won't trade that one. All right, here's one, overbought, oversold, nice two waves, so that was a good signal. And the one previous to that was a great trade. You see, this is what happens when you catch these great trades there. Can you see the two big waves, overbought, oversold? That was a fantastic trade down. Also a good trade up. At the moment, it's setting up. It's gone overbought, it's gone oversold. It is setting up for a trade, the pound New Zealand. It is a little bit early. It hasn't crossed the line yet, so it cannot go onto the shortlist at this stage. But certainly this one needs to be watched. I'm going to add it to my trading diary as an item that needs to be watched. So I'll just, and your trading diary can be kept on an Excel spreadsheet. So I'm going to just put this one, pound New Zealand, and it's on the 4-hour time frame, and it is a RSI. They all will be RSI signals, and the direction is for a sell, and the comments, watch, almost crossing. So the next time I come to review the market, I'll look at my trading diary and I'll know to watch that one. It doesn't qualify right now, so we won't add that to our list. The euro yen, again, some previously nice signals, but nothing happening right now. We'll have to wait a bit. Again, the pound, very nice signals previously, and this was a good signal, but doesn't seem to be playing out. Look, there's our two, and that one. So at the moment, we can't really do much with that one, and we have now a new turning point, so we'll look at that at a later stage. The Canadian, good breakout there, already missed it, so, and there was a particularly good trade there, although that didn't go oversold. So I'll take that line out. It has to go overbought and oversold to give a signal. So there was a pretty good signal which we've missed already. And this one isn't going overbought at all. So because it's trending, and that's the other thing. If the market is trending, you won't get signals, and because the RSI system is mainly a sideways market system, so it has a safety mechanism that you won't get signals using this particular technique. So far we've pulled a blank. Now, a lot of people will be so disappointed. I'm normally quite happy with that because I know that this system is keeping me out of a uncertain market. So what we'll do next is we'll go to the daily charts and have a look if we can see anything setting up there. So again, nothing much happening here. Now here's a signal. Basically it hasn't crossed over yet, but it's a pretty good one. I'm going to just open this chart up a little bit more, give you a view. Now remember the divergence that I spoke about earlier. This has got a really nice divergence. The price is going up. You can see the price going up, but the RSI is going down. So we've actually got a really nice signal here. We've got an oversold, overbought, divergence, and trend line signal happening all at the same time. So this will definitely go onto my short list. I'll say this is the USD yen, and it is the daily, and it is also the RSI, and it is a sell, very close to crossover. Okay, so that one we will definitely look at in a bit more detail later on. Right, so let's see if we can find any. So we've got one on our short list today. This one's going sideways, not going overbought or oversold, and you can see that on the chart. So it keeps you out of this trade. That one hasn't gone oversold yet, so that's kept us out. This one has generated a signal, but a very weak one, and the market is not that great. It's going sideways. We missed the signal anyway, but it's not a signal now, and I have to change it to something like that. So we'll look at that at a later stage. This one again hasn't gone overbought, hasn't gone oversold, nothing much happening there. The line should actually be like that, and we'll watch out for that crossover. This one hasn't gone oversold for a long time. It's trending, so we won't look at that. And this one hasn't gone oversold for a long time, so we won't look at that. This one hasn't gone oversold for a long time, also missed that, and that hasn't gone overbought or oversold for a long time either. This one pretty close, but it hasn't gone oversold for a while, so we won't watch that one. And this one has had a good, nice breakout. It has had a few nice trades. There's the one trade, there's the other trade, but it hasn't gone oversold, so we can't really use that one. So out of the 24 currencies that I've looked at, I've only found one trade. Now, this is what happens with the system. It's either feast or famine. Sometimes you don't find trades, and then other times you'll find 8 or 9 setups at once. So when I find a setup, the next step is to look at the relative strength of the currencies that we're looking at. So now the yen is the main currency here, but the USD is also a currency. So what I'll do now is I'll move on to the relative strength charts to see which currency. Is it the USD that I should be trading? Is it the yen that I should be trading? And is the movement that I'm seeing on this chart consistent with the other currencies in the markets? So we're going to move on to, we'll do the yen, the relative strength of the yen. So I'm loading the relative strength of the yen chart, and all this is I've loaded all the yen crosses. You can see all the yen crosses are loaded in this chart, and I want to see what kind of movements are happening relative to the yen. So yeah, on the pound yen, we're seeing a similar signal. We're seeing overbought, oversold, overbought, trend line. That was a beautiful trade, and it hasn't really worked out. It hasn't really moved much, but a very similar signal. So we've got some support for this trade in this currency. This one has not. You can't see much there. You can't see much there. Can't see much there either. That you can't see much more there because it hasn't gone oversold, and this one also hasn't gone overbought and oversold. So our main trades here are, and these are the 4-hour charts. I'm not using the daily, I'm using the 4-hour, and this one is also not telling us much. Remember the signal came from the daily chart, so this one's also not telling us much. So we haven't learned all that much, except that we've seen quite an interesting trade, a potential trade happening here on the pound yen. That's most probably a qualification trade. Now I could add this to my review shortlist, and maybe I'll just do that just to make this review a little bit more interesting. Yen, we disregarded that because those last few candles hadn't followed through, but I'm going to just add it again, and let's for the sake of this analysis, and we're looking at a sell there, crossover, but poor follow through. Okay, so it hasn't followed through after that crossovers, but we'll have a look at the pound yen in more detail. We'll look at the yen in a bit more detail. And so the other side of the coin, as it were, is the USD. So what I'm going to do is I'm going to look at all the USD crosses now and just see if there's any patterns in what is happening on the USD. Now that's what I would call an ugly chart. I won't even look at that one. This one's not too bad, but it hasn't, the pound hasn't worked very well. You can see the previous trade was a pretty good one, and the one before that even better, and the previous trade was in fact this one there. It did go down quite a bit, but it is now retracing. That one doesn't tell us much. That one not very good. That doesn't tell us much. That doesn't tell us much. So there's no signals coming on the US crosses. So the two signals that we've picked up is the pound yen and the US yen. So it shows you the yen is possibly the mover in the market at the moment. So let's go and have a look at those currencies in a little bit more detail. So we're going to look at the US yen first. Now on these charts I have the weekly, daily, 4-hour and 1-hour charts. I've got the multiple moving average charts, and I've got channel trading charts on this particular one. Okay, so what we were looking at here was a potential. Now this one's starting to turn up, so our deal is basically going away for a while, but within a couple of minutes that little turnout could actually turn down. So I won't disregard it yet. So let's continue with the analysis. So I'm going to start with the weekly chart, and as you can see on the weekly, there's quite a bit of channel trading that's going on here. 1, 2, 3 very nice bounces, and it's at the next bouncing point. So very much looks like a bouncing potential there. So the weekly is saying potential bounce. The weekly RSI is pointing down, which gives me a support for a sell. And that's what we want to do here. We want to sell. This one we've already looked at, but there is a wedge that's developed here. It is trying to break out of the wedge. You can see it hasn't really done it, but this particular setup is really good because it's got a big divergence. See that big divergence, and it's also got a small divergence. So let me just show you small, so a more recent one. So there are a few signals that's telling us that it is ready to break down. You can see the general movement is ready to break down. So I'm pretty keen on that particular trade still. So let's have a look a little bit more. So that was the daily chart. Now let's have a look at the 4-hour chart. Now when I start getting into these charts, I start looking at support and resistance. So let's just look at that. Just trying to get a good, oh, that's most probably a good area there. Okay, and most probably a good area of resistance. Let's move it down. Yeah, it looks like a good area, and that looks like a good area. All right, so I'm drawing the support and resistance in, and one of the guides that I use is that support and resistance normally works in grids. So you can see these lines are almost grids. They're not quite, but they're almost grids. In fact, if I move this up a fraction, we almost have that grid that we're looking for. But they do tend to be, that's one of the checks that I do about support and resistance. They tend to be working grids. So so I'd start looking at candle formations. I'd start looking at horizontal and non-horizontal support and resistance, and that's what we're doing now. What's happening right now is that it's bouncing on non-horizontal support, and it might need another cycle before it comes down. Let's have a look what else we can see in here. There is another level of resistance. Resistance, that's about there. Okay, that's fine for now. Let's look at some of the other charts. Now on this particular chart, I've got a channel trading indicator, and it identifies the turning points and draws channels accordingly. So it says it's bounced there, it's bounced there, it's bounced there, and according to channel trading, it should go down. It should go down to the next level. So that's supporting a sell. I'll have a look at this on a 4-hour basis. Now sometimes these channels don't draw properly. I think that's most probably invalid because it hasn't really got good bouncing points, this particular one. I would override this channel by saying that's most probably the channel that we should be looking at. Bounce, 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 and that's going down to that level. So so that supports they are supporting a sell. And then you look at the multiple moving average, and we can look at the 4-hour level, and all of the multiple moving averages are pointing down. So support for a sell. The daily's starting to consolidate, but from a high position downwards. So it's also thinking about selling there. So there is quite a lot of support for a sell, although the short-term support on this present candle is not very good. So let's think about if we were to trade this. If we were to trade it, I would say I would only trade if it makes a new low. So I would probably only enter there, and I would put my stop just above the previous resistance, so around about there, and my target would most probably be to the next support and resistance level, which is around about there. And yeah, we've got a trade, so the stop would be 70 pips, and the target would be roughly 100. So we've got 70 pip stop, 100 pip target, and that looks like a reasonable trade based on the lack of upward movement there and the support that a lot of the other charts are giving for a downward move, especially the weekly that looks like a sell. That looks like a sell, but it's in a short-term correction, so we'll wait for that. And that's why this trade you would only enter on the low of the previous candle. You won't enter straight away in the market now. You'll wait for it to confirm the breakout and that type of thing. So this trade I would most probably enter as a pending order trade. It might not even activate, and I will review it at the next time I review my charts. Now, sorry, I'm not looking at the camera that much because I'm focusing on the charts. Now, really, there haven't been great trades that came out of today, and that's I'm pretty happy about when that happens, because it tells me today is not the greatest day to trade Forex. Let's just, while we're doing this, let's move to the pound yen. Remember, we picked up a potential transaction there. There's the potential transaction. Overbought, oversold, two nice mounds, and it broke out. It hasn't quite worked out, but let's see what's going on. Why isn't it working out? Let's have a closer look at the movement. The weekly is showing upward movement. Can you see this upward on the RSI? Upward, the general trend is up. So that's most probably why this against the trend trade isn't maturing. The daily is showing a really unhappy pound yen. It's not trading like it normally does when it goes oversold, overbought, oversold. It's now consolidating in the middle. So it's a bit of an unhappy currency at the moment. This is a nice signal, but it hasn't really matured, most probably because it's a bit against the trend. That's most probably it. And if we look at the channel trading, then you can see why it's battling a bit, because there's the bounce, there's the bounce, there's the bounce. So the next bounce should be up here, and that's the trend. So if we're considering selling, we're selling against the trend, and that's why this deal is not maturing, because that is a pretty good signal. And that's why it's so important to not just take signals that you see blindly. You've got to look at the other charts. Look at the weekly, the daily. What kind of price action do you see? And the moving averages don't tell us much at all in terms of they consolidating. So in other words, the currency is waiting for something to give it a kick. It's going to consolidate until something happens in the market. Let's look at the daily. You can see, oh, pretty bad. That's just horrendously bad compared to its normal movement. As you can see, it's got, normally it has really nice movement. The pound yen not moving pretty well. Okay, so I wouldn't trade this one because of a high level of uncertainty that is in the, and also the fact that there are a lot of buy signals, like this channel trading trade is up, the weekly is showing a slightly upward tendency, and I wouldn't trade that particular trade right now. Okay, so I think we've basically gone through the process. The next thing to do is to decide on this yen trade. Let's go back to the yen and then place it. Now it would be a pending order trade. It's also not acting the way we'd like it to, but if it does break that line, there are just so many signals that says that it will be a good trade, especially the daily. You can see the daily, you've got those divergences, you've got that two beautiful mounds, and if it breaks that line, I haven't drawn that properly, but if it breaks that line, certainly I would want to get into that sell. So I would place this that order right there. I've got, by drawing the lines, you get your values. So you can literally take your values from there and 1424, and you could then take it. I like rounding it up, or rounding it off rather. So this would be 100 pip target and a 70 pip stop on this particular trade. All right, now again, because this our streaming session failed this morning, I'm not getting any comments or questions, but I hope you found this approach interesting, and I hope you've learned a little bit from it. It isn't the greatest example of this trading method, but it does show that when the market's bad, it keeps you out of trades. Now I might do this same exercise on Thursday, and you'll see quite an amazing difference. Thursdays tend to get the market moving a little bit more, and also it will give these charts a bit more time to get new levels, especially on the 4-hour charts, and hopefully there will be more trading opportunities. So just before we go, let me just remind you why this particular technique works pretty well for me. You create an intimate relationship with the market, in that you are looking at all of the major currencies out of different perspectives all the time. I did it a bit fast today, but in the end, through the course of a week, you would be looking at most probably 60 to 70% of all the currencies in the market in quite a bit of detail. So you start developing a feel of what's going on in the market. I only trade the best trades that I identify. Now, today I traded 1 out of 1, and that might not activate. It will only activate if it does become a good signal. So, and normally my ratio is normally 10 to 1. I would look at 10 trades and only choose the best one. And that's another reason why this system is so successful, is you're very selective with your trades. When all the signals you see are in one way, that's also a danger. So there is no such thing as a perfect trade. But in the end, the process that I've shown you here will give you a good feel of whether your chances are 80-20 towards success, or 70-30, or 90-10. That type of, you start developing those kind of a feel of trading. I'm using a robust technique in that I'm using multiple time frames, multiple methods of analyzing the market. I'm looking at the relative strength of the currencies compared to the other other currencies. I can see trends in that I can, if all the yen's currencies are strengthening, then I know the yen is dominant, and I can pay attention to the yen crosses. The market is generally dominant either in the US dollar or in the yen. So those relative strength charts will tell you which is the driving currency at the time. Every trade is unique. As you've seen, I worked out the stop and the target very specifically. I mean, that's something you can't do with automated systems. The automated systems use the same stop and the same target for all its trades, and you lose that uniqueness. Now, what you didn't see here is the post-mortems, which is actually the most important of it, or an important aspect of this technique, in that on a weekend you would look at all the trades you considered, even the ones that you disregarded, and then you look at how they turned out, whether your decision was good to disregard them. We looked at the pound yen. It looked terrible, but it might still turn into a sell. And at the end of the week, that is the most important time, because that's when you teach yourself to spot the type of signals that have the best chance of success. The market will give you feedback and say, look, this is the way I want to be traded, and you'll start listening to the market. I'm sorry about the missed stream session, but if I can get the streaming right, we could have these kind of sessions a lot more frequently. So from me, Alex Deploy, cheerio.